So what exactly is the first pullback? It's a highly reliable pattern that appears in almost every trade setup. Here's how it works. Imagine the price is in a downtrend and begins to reverse into an uptrend. As you probably know, clean V-shaped reversals are extremely rare when trends shift. What usually happens is the price begins to reverse, pauses with a brief pullback, and then continues climbing. This initial pullback after the reversal is what we call the first pullback. And I'm not exaggerating when I say this pattern shows up everywhere on the chart. Still skeptical? Let's go through a few examples. Here's a 4-hour chart of Bitcoin. The price was trending down, then reversed to the upside. Before moving higher, it made a small pullback, a textbook example of the first pullback. Now take a look at this gold chart. In this case, the price started in an uptrend, then began reversing downward. But before continuing the drop, it made a slight pullback. Again, the same pattern. Here's a chart of Apple stock. The price was initially trending down, then reversed upward, formed a pullback, and resumed the uptrend. You'll find endless examples like these on nearly any chart. Try spotting them yourself after watching this video. So the core idea behind this strategy is to time that first pullback and look to enter near its end. And the reason why it works comes down to one key factor: risk to reward ratio. Let's break that down with an example. Suppose you see a setup where the price is coming out of a downtrend and strong buying pressure starts pushing it upward. As a trend trader, you might recognize the shift and consider buying in. Quit jumping in right at the highs of the move isn't the best play. Why? Because there's always a chance the price pulls back, or worse, the new uptrend fails completely. If you enter at the highs with a tight stop loss, the pullback alone can stop you out. And if you set a wider stop loss to account for the pullback, you'll end up with a much bigger loss if the trend fails altogether. This is exactly why waiting and entering at the first pullback is almost always the better play. At a pullback, you're getting in the trade at a more favorable price, which means your stop loss can be tighter. If the price keeps dropping after the pullback, that's a signal that the uptrend is invalid anyway. So having a tight stop loss keeps your losses small. So if you're ready to deepen your market knowledge, sharpen your trading edge, and start making smarter investment decisions, don't miss the full video on our channel. Watch now.